shares of Carnival Corporation. They are the 7th best performer in the S&P 500, up 132% year to date. And we are delighted to have with us on this Friday Carnival's Josh Weinstein. He's President, CEO, and Chief Climate Officer, joining us here on set in New York, in town. Welcome, welcome, welcome. Almost Happy New Year.
Happy New Year to everybody. Thanks for having me.
How are you thinking about the year? I mean, you guys have had a great one in terms of a stock run. You're working on a lot of things in terms of paring down debt. Talk to us. You just reported earnings last week, some pricing power. Talk to us about the kind of the business environment.
Yeah, so the 2023, we wrapped in November, on November 30th, and the one word that we like to use as a summary is record. We had record demand, record yields, record pricing, record bookings, forward bookings, record onboard spending level. So really across the board, our business has really thrived in 2023, and we expect much more in 2024.
It can continue because you're such a great gauge of how customers are feeling. You have several brands, but you really kind of speak to, the everyday U.S. consumer, if you will. And you just have a great read on it. Are they continuing to spend? Are they continuing to do advanced bookings? And then once they're on their ships, Josh, continuing to spend as well?
Yeah, that is exactly what we see. As a matter of fact, our Q4 was, and from a pricing standpoint, the highest all year. So it's accelerating; it's not decelerating. And then when we look forward, we're actually 2/3 booked for all of 2024 already.
It's nice visibility.
It's not too bad. We're about 10 points higher than we were last year, and on top of the ticket bookings, we've actually started pulling forward onboard spend. So we have more or less about a third of our onboard spend being prepaid in advance. So we have a really good amount of visibility, and those booking trends, they just haven't slowed down. Every quarter this year, people expected it's gotta slow down. We're gonna see something. The consumer's gonna get impacted, and the fact is, with our business, we haven't seen it. It's record after record. As a matter of fact, we just ended the 2 weeks of Cyber Monday and Black Friday at more records, and it's not just coming from one brand. It's not coming from the United States. It's global. It's with our global portfolio of brands, which is really, really encouraging.
Do you think we're moving? Good morning. Good to meet you. Do you think we're moving from many CEOs similar to yourself that I've sat with that run global airlines and global businesses have said, we've lived through a period of revenge tourism. We were all locked up for a period of time. This is something, we had this parabolic reopening and you had a parabolic rebooking. Are we evolving into some kind of new cycle? You say there's no end in sight in this demand. So if we've ended revenge tourism, how would you describe the next evolution?
Yeah, that's a great question. So we don't think this is revenge anymore. This is not pent-up demand. It's 2 years on from when we really got back in full as a corporation. This is people who have decided what's meaningful for them. How do I want to spend my life? And experiences are what they're looking for. Unforgettable memories and creation with friends and family. And that's exactly what cruising has to offer.
And that's what I sat down with the Accor CEO and he said, look, I haven't got enough hotel rooms and I haven't got enough high-end staff to help me run this business, which then takes me to the cruise is the high-end hotel. But to what extent are those packages off ship and onshore, those additional spends, are they critically important to the expansion and the turnaround from the loss that you've had? Do they add incrementally or significantly?
So, when we think about our business, we're a little bit different from when you're looking at hotel companies. I'm staying in a hotel in New York, and I won't tell you which one it is, but I'll tell you the service is not very good. And we've learned how to live with that as a society. It's almost a tacit acceptance. No, we should not.
No.
And the cruise industry, our brands did not deviate from service level. Our guests have high expectations and we aim to exceed them. We do not close off floors. We do not shut areas down. We do not skimp on the services that we used to offer. It is full steam ahead, and that's what people expect, and that's what they're willing to pay for, and that's what we're seeing.
And let's talk a little bit about the fact that you are a global brand, of course, a global company that goes many places in the world. I don't need to tell you that the geopolitical landscape, very fraught right now, 2 hot wars, and of course conflict in the Red Sea. Has that impacted at all where you can go? And are you seeing any inflationary pressures from some of the things that we're talking about here?
So the second question is no. We haven't seen anything of note. Obviously, we pay attention to crude prices, which is a good barometer of a lot of things. With respect to the impact on our business, we had about less than 1% of our business touching Israel in one way or another. Not necessarily home porting, but it might be one transit stop on a world cruise or something of that nature. We made changes some time ago. We actually don't have any ships transiting the Red Sea area for several months. And so obviously safety first, and we have mitigation plans should we need to adjust where those ships would be transiting. But as of now, we're in a watch and learn mode.
Let's also talk about your bond book, because it was interesting seeing just last week actually S&P coming out and upgrading Carnival, not quite back to investment grade territory, but you're getting closer.
Two notches higher.
Two notches higher. On earnings day, actually, you think back, and the chief financial officer of Carnival said that there's a real possibility that Carnival will come back to the debt markets in 2024. Where's your current thinking on that, and what would actually bring you back to the debt market?
Well, really, the only thing that would bring us back to the debt market, as far as we can see, is if there's opportunity to refinance on more favorable terms.
So lower rates.
Yeah, lower rates. We're not, or managing our maturities, but we're not looking to lever up. As a matter of fact, as you said in the intro, we've managed to cut down our debt load by about $5 billion so far. And we expect much more of that as we go forward. You know, that's priority 1, 2, and 3 when it comes to our capital structure, delever.
Hey, you know, one of the things, and it kind of ties together geopolitical, but also kind of, you know, where you're thinking about growth. Saw a story, I think it was today or in the last 24 hours, that the first domestically built ship in China getting ready to hit the high seas. But it's a joint venture. You guys are involved in this. And I think about how important China is for you guys, but also geopolitically concerns about China, its ambitions with Taiwan, and whether or not there's going to be some problems there down the road.
Sure. Well, we're very happy for the folks at the China JV. We actually unwound the JV earlier this year.
You did?
We did. So we've been providing shipbuilding expertise support for them, and we were very happy to do that. And we're
the
very
story
excited
still says you guys are involved, but go ahead.
Well, that could be how we're involved at this point. But from our perspective, we got a portfolio of world-class brands all over the world, and that's where our focus is. You know, it's great for the cruise industry that China has opened up, and it will be opening up for international cruise companies. We're not going to be one of them that's going back in. We've got our assets where we want them. We've changed our asset strategy. We've moved ships to different brands to accommodate the change in China, and they're doing very, very well. So we'll take a wait-and-see approach on that as well.
But not a market you need to be in right now, just
No,
quickly.
it's definitely not.
All right, going to leave it there. Listen, so appreciate it. We know you're spending some time with family, but great to get you while you're in time.
My pleasure. Thanks, and Happy New Year.
Yeah,
I
same
hope
to
the New
you.
York hotel tuned in and listening. You should be getting an upgrade.
I've had the same experience in some hotels. I don't think they have the workers.
They do not.
You
It's
got
pretty
to
clear.
Do you have all the
Stay on the
workers that
ship.
you need?
We do have all the workers that we need, and I'd encourage everybody, come book a cruise before we run out of inventory for 2024 because it's going pretty fast.
Josh Weinstein, the president and CEO of Carnival, thank you so much. So
Thanks.
appreciate it.
Appreciate it.